Hello and welcome to another update video about ADA. In this video we want to start on the daily time frame, just a bit of a refresher of where we are in the larger cycle, and then we'll take a look at the smaller time frame. But yeah, looking at the bigger picture, there is the potential that from the swing low in June, which I've labeled as a wave 2 low, it could be something different that's highly speculative. These altcoins often at some point they will break their structures. That's just what they do. Okay, so it's not that okay, ADA is gonna go to, like, I don't know, $1,000 one day. There is a roadmap here, but I don't expect it to be filled in. Okay, so that's disregard that. What we really need to look for is, okay, does ADA fulfill its potential in this bull market? Okay, and that's sort of how far I can see, how far out here to round about 430 to 680 possibly. I mean, that might still change a bit, but we have an area of where the price might land. It's important though that to keep this potential alive, that we are holding the 29-cent level. That's the 78.6 Fib level here of our Fibonacci zone. Below that, the probabilities are starting to shift. Invalidation point, which is a little bit different to the point where probabilities shift, but the formal invalidation point is the June 23 low at 21.5 cents, pretty much 22 cents. So if we break below that level, that's it. Then the yellow wave count will come into play, and then ADA would still be working probably on this wave 2 correction, and it never finished. And yeah, but I'm not sure if it's going to do it then in this bull market. So the question is it gonna worth, is it worth to wait for that then? Probably not. So the perspective is at the moment that there is a good chance that we are turning around in this region. At least this is where it would need to turn around to keep the potential alive. Okay, so the Elliott wave doesn't tell us it has to turn around there, but it tells us, okay, we have a first 5-wave move to the upside from the June 23 low. So there's definitely potential. It gives us very clear parameters that we can watch, and yeah, it should, not will, but it should turn around there and then start a 3rd wave rally to the upside, then give us a 4-5 ideally, and that 3rd wave should get into the $2 region. And then this 5th wave should take us to new all-time high territory. That is what should happen, not what will happen, but it should happen as long as we're holding 29 cents. Okay, break below 29 cents will be a red flag. So let's go to the smaller time frame wave count. No, that's PUF. That's PUF. This is ADA. Here you can see the structure from the June 23 low, invalidation point, 5 waves to the upside. That's generally a bullish structure. And we have, at least it has bullish potential, and we have 3 waves down into the main support region that are defined for a wave 2 with the help of Fibonacci mathematics. And we're currently dancing, as you can see here, in the region between the 38.2 retracement and the 50% retracement. Typically already an ideal, let's say an ideal zone where such a wave 2 would finish. But the upside reactions to these levels haven't really been substantial or in any way, convincing. So from that point of view, because we haven't seen any convincing reversal yet, and we haven't broken out above the April high, any direct upside potential from here is speculative until we get a break to the upside. I don't have the clear setup on the smaller time frame that would support it, which in turn means that the bearish count, let's call it short-term bearish, because it's currently, as long as we're holding above 29 cents, all part of an overall bullish perspective. But the short-term bearish potential would be A, B, C, D, E. It's an Elliott wave triangle. ADA could be working on the E wave now, and then we get one more low. It's really crucial that the next rally takes it above 51 cents, and then also here the 52.2 cent level. Very, very important. Okay, but overall, as long as we are in this range caught between the red and the green lines, I tend to call everything just noise, which it is. I mentioned to you already, 1 or 2 weeks ago, maybe even further, further out, that this is not, we don't have clear signals that it wants to go up. It's possible, okay, but we need to break out. So as you can see, nothing happened. So you could say the forecast was absolutely correct. It's just whenever we see corrective structures, it can really get very, very boring and draining. And, it takes a long time because corrections, the market hasn't fully made up its mind yet. It tries to do all these things at once, tries to break out, fails, you know, tries to go down, fails, and then it's trying to do all these things at once, which is why these corrective patterns are always chaotic. Which means that the orange wave count allows us to interpret this as a diagonal pattern to the upside in 5 waves. But the subwaves are corrective, which is why it's a diagonal pattern. We can't really trust it until we get 5 waves completed. That would then allow us to, let's say, formulate the next trade setup, because a 5-wave move to the upside, as highlighted in orange, would allow me then to add the next support region as an ABC structure to the chart. 5 waves up, 3 waves down, and then we call that again another 1-2 setup, and that would be our setup for higher prices. At the moment, as long as we're caught in the range, there isn't really anything exciting. Please be aware, because it is a diagonal, these structures tend to break, and it also is very, very balanced in terms of probabilities, especially as long as we don't invalidate the Elliott wave triangle, which a first step for that would be that break above the 51 cent level, the so-called C wave high of the triangle, and then the 52.2 cent level. Triangle is basically the white count, okay? As I said, I showed it to you, A, B, C, D, E, and it would be a wave 4. Triangles can be wave 4s, and they would normally break out to the opposite side of the E wave, so in this case to the downside. But it usually takes also confirmation for a break, because these triangles are not very reliable, so it would need a break below the 42 cent level, which I've marked here as a white wave B low or orange wave 2 low. Okay, and the red line, basically that indicated by the red arrow, that would be sort of a confirmation level for this move to the downside. And if we get one more low, the question might come up, okay, what is the next target then for the downside? And it would be between 36 cents and 38 cents. It's the area around the 2.382 extension to the, 61.8 Fibonacci retracement. And ideally, I don't want to, if it's really a triangle, then this typically indicates that the next wave should be the last wave down. So it's either the low is in, but it's not very obvious yet, or we get one more low. That's my update about ADA. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.